Hello everybody, what's going on? So few big insights are coming from NIO's end. Let's look directly at the groundbreaking boots on the ground development. Image surfaced on Weibo from a prominent automotive blogger with 500,000 followers, showing row after row after row of freshly built vehicles staged across the logistics area at NIO's F2 facility inside NIO Park. We are talking more than 2,000 pristine NIO vehicles parked wall to wall straight off the production line. The blogger's takeaway was simple. Their production capacity is absolutely through the roof. So the question here is that why is NIO front loading production like this? It is because they are setting up for an absolute monster delivery ramp. The company guide for second quarter deliveries of between 110,000 to 115,000 vehicles across its brand portfolio. If you do the math on their progress, they bought in 29,356 deliveries in April and surged to 37,700 in May. That brings their 2-month total to 67,000 vehicles. To hit just the low bound of their Q2 guidance, NIO need to clear at least 42,900 deliveries. That means maintaining a pace of 1,431 vehicles per day for the entire month across the group. NIO management has laid it out clear as day. June is the decisive month for the quarter, seeing F2 factory bursting at the seam with inventory confirm that the supply side is fully synchronized to meet this massive demand wave. This brings us to a vital context check, where NIO's founder and CEO William Lee shared that this year has been the toughest one in his career. The media snippet explicitly notes that he thinks there are still quite a few challenges ahead in the market over the upcoming months. But right underneath that cautious executive realism, the text highlights a crucial silver lining. But hey, exports are doing pretty well. It is a battle-tested company led by an executive who doesn't sugarcoat the macroeconomic environment. Yet, look how the execution is overriding those challenges. The premium ES8 SUV is absolutely anchoring the lineup. It is accounted for 11,475 of brand's 20,013 deliveries in May alone, a stunning 57.3% share of brand's output. According to data from NIO, it ranked first in sales among all models priced above that threshold for 5 consecutive months, beating out all competition across all energy types, meaning it beat traditional luxury internal combustion engines and plug-in hybrids alike. What even more fascinating from a financial perspective is how the product mix is shifting. William Lee noted on the first quarter earning call that ES8 order intake shot up 30% week over week after test drive opened for the newer ES9 model. Instead of the new flagship model cannibalizing older sales, it lifted the entire premium lineup. Customer demand is actually skewing heavily towards the high price configuration equipped with their premium Skyride fully active suspension. Usually in automotive manufacturing, the cheapest trim have the longest backlogs. With NIO, the exact opposite is happening. Customers want to highlight margin configuration. This brings the F2 factory right back to the center of our investment thesis. This plant isn't just a building, it's a structural moat. Situated in the NIO Park Industrial Hub in Hefei, it has a designed annual capacity of 300,000 vehicles. More importantly, it is the official registered production site for multiple models across all three of NIO's strategic sub-brands, handling everything from the high-end 85 and 89 sedan to the mass marketplace like Onvo L60 and the Firefly EV. Remember, at the end of 2023, NIO secured its independent manufacturing qualification and bought out key assets from JAC. This transition is fully independent production, gives them total control over their manufacturing efficiency and margin structure. Now, the F2 plant is pumping out the premium lines alongside mass market volume movers like Onvo L90 and the L80 SUVs. For the full year, NIO is targeting an aggressive delivery growth rate of 40 to 50%. That implies an annual volume between 456,000 and 489,000 vehicles, up significantly against 326,000 vehicles delivered last year. The packed staggering yard at F2 are physically proof that the company is moving with intense urgency to capture the remaining volume needed to crush those annual targets. So, what is the bottom line for the stock here? Yes, William Lee acknowledged the immense difficulty of the current market landscape as we saw. But while critics focus on macro anxieties, NIO is quietly building an absolute manufacturing juggernaut. They are managing a highly successful multi-brand strategy that their premium vehicles are dominating the luxury segment and their independent manufacturing infrastructure is finally hitting full utilization. When a growth company pairs realistic battle-hardened leadership with an unstoppable production engine, long-term investors win. The physical reality of thousands of EV rolling off the line at NIO Park shows that NIO is positioned not just to survive the EV transition, but to lead it. Very soon we will see all these vehicles are being delivered to the customers, and because of that, their delivery numbers are going to skyrocket. So prepare now.